morning, folks, and happy Sunday to you. Happy Super Bowl Sunday to you. Coming at you with this week's market wrap video. I don't have, I got way too many things going on this weekend to do any kind of a live ticker TV stocks to watch video, but I did want to get out a market wrap video with a couple of stocks to watch for next week. And I'm going to go ahead and just start out there. USLV is one thing that I am watching next week, and the reason why is if you look at gold, which has had a tremendous run. We talked about last week, we talked about gold potentially breaking out over the 108 area. If it could take it out with conviction, that we might see some good action in gold, and we did see that last week. We got a breakout over 108. We took out this trend line here with a little bit of conviction, and GDXJ and GDX also had some nice action. GDX coming up into an area of what was support and now has acted as resistance, $17 holla. We may see a little bit of consolidation in this area before we take it out, but it does. I mean, we closed nearly at the high of the day in the GDX, so look for potential continuation in that sector. I mean, it has gotten a little parabolic. It's had a nice little run, and that's kind of the reason why I'm focusing on the USLV. Is it hasn't had as parabolic of a move as gold has. So I'm thinking maybe it'll do a little catch up, right? Some sympathy, perceived safety trade. That's the kind of thing that we're looking at right now. What happened last week? So, I was hoping that we would get a follow through of the action that we saw last Friday. And I had a couple of themes for that. One was I was hoping that the Fed was going to stop their rhetoric on raising the rate 4 times this year. And the other thing that I was kind of hinging it on was Gilead's earnings report and the likelihood that maybe it could help the IBB give us a significant bounce there. And if we could get a significant bounce in the IBB, we would then see participation of the overall indexes and maybe keep up that run that we had started on Friday. Clearly, this market has changed. We have gone from that buy the dip mentality to sell the rips. And you can see that in the duration of the length of the buy the dip mentality. It's short-lived. So IBB, what I was kind of hinging that one on was Gilead. I was looking for Gilead to come out, and if earnings were better than expected and their guidance was better than expected, maybe we could see a nice bounce in Gilead, and that would give us a lift in the overall IBB. That did not happen. Even though Gilead's earnings were good and they announced a massive share buyback program, it was not enough to give a strong lift to the stock, and it also wasn't enough to give a strong lift to the sector. So one thing we know is that the IBB is under a tremendous amount of political pressure from our presidential candidates, and that's going to continue through the entire year until we elect our next president. So this is a sector that has been broken long-term technically, and looks as though we could continue to see more pain ahead. I mean, they're not going to just drop out of the spotlight. So it doesn't mean that we can't get a nice snapback bounce or a quick snapback trade, but this is a sector that we know is likely going to be under pressure, political pressure, the entire year. And if we can't get a nice sustained rally in the IBB, I failed to see how we can get a sustained rally in the overall markets. And it's at a pretty critical area here. If we break below 250 with conviction, I think you're going to see some real pain in the IBB, potentially coming down, test the $200 level, maybe even come all the way down here and test this 188. But I think IBB is an area of absolute caution. Let's go through the major indexes real quick. Taking a look at the NASDAQ, we closed basically almost at the low of the day, we're coming up to this area that was resistance and now is acting as support. Look at it like this. It's like that game Pong. If you're old enough to remember, you know, the ball keeps hitting the wall until it hits the blocks until the blocks disappear. Every time we hit this area of support, if eventually it's going to crack, and when it cracks, it could get extremely ugly, and we are testing an area of potential support. The action in LinkedIn was really, it was something to see, right? I mean, their earnings were not terrible. It was the quarter. The quarter that just finished was good. What hurt LinkedIn was the guidance. And here is a stock that basically closed. This is a darling. Basically closed at what? In the 190s and opened and went down to 108. Almost cut in half. So we've got some key earnings reports coming out next week. One for Disney. We'll go over that chart in a second. But look at the damage that can happen in a stock when you give poor guidance. Now, you know, the Fed, interestingly enough, last week, even though the payroll report, in my opinion, was not a very good payroll report, we missed on the number by a pretty decent margin. But the fact that the unemployment rate dropped, I guess, was what everybody was looking at. So that has some people thinking that a rate increase is back on the table for March, and that is putting some fear into the marketplace. My belief is that that payroll report was not that great, and that more importantly, the news that we're seeing out of these companies that are reporting and giving guidance has been weak. And you know, I've got a buddy of mine here in Las Vegas that runs all the major conventions here in Las Vegas. Told me yesterday that he got an email from one of his clients that she will no longer be with the company, that you know, Adobe is doing a workforce reduction, and she was one of the casualties of that workforce reduction, 10%. You know, we're seeing a lot of companies announce layoffs, and it's not just in the oil and gas industry. And if you've been following me, you know that the two things that are extremely important are jobs and earnings. And earnings have not been fantastic, and jobs are looking like they are going to start coming in more. And look, those numbers take a while to work themselves through the system. It's like a self-fulfilling prophecy when you start to see these companies cutting back on capital expenditures and also laying off employees. That is not a good trend to start. So keep that in mind. I'm not trying to be overly bearish here, but there are some things that are definitely pointing to a more challenging market ahead. So that's the NASDAQ. That LinkedIn, look, it wasn't just LinkedIn. Let's take a look at Apple. Apple was a bit weak on Friday, looking as though we could potentially take out this 92.50 area. If we take that out, you know, could we come down and test 83? That is absolutely possible. Let's take a look at Amazon. Amazon closed nearly at the low of the day. Looks as though it wants to take out 500. If it can take out this 500, where could it fall to? Could it test this 445? Absolutely. Could it come back all the way down here and close this gap at 400? That is possible. So keep that in mind. Let's take a look at Tesla. Testing 157. I mean, not too long ago, this thing was $300. Does this look like potentially a double top? It does. I would be extremely careful in Tesla. Let's take a look at the weekly. If it breaks below this 157 area or 155 area, takes out the 200, could it come back down here and test this 114 area? It's possible. Disney is a stock that is reporting next week. We have a potential double top. We talked about this several weeks ago. Is it possible that Disney could come down and test somewhere in this 67 area? Could it test 80? It's possible. It, Listen, this has been a totally different change of market. It is a sell the rip type market, and I think we need to be extremely cautious moving forward. So you've got Disney, which reports next week. Look, if they crush it, if they have a tremendous earnings report, maybe we get a nice bounce in the markets. But I would suggest that any bounces that happen in the market are opportunities to raise cash. And we've talked about this a few weeks ago. Volatility has been the area to play since the beginning of the new year, and it looks to me as though that could continue. That trend could continue. Safety is a big area. Utilities, we'll go over that in a minute. Let's talk a little bit more about this Disney. Uh, they report on Tuesday. If they miss the number, you could see a dramatic drop-off. I don't think you'll see anything as intense as the LinkedIn drop-off, but you could see a dramatic drop-off. Lionsgate reported on last week. Look what happened. Okay, the stock got crushed, and it looks as though it could potentially head lower. So you got to be careful in this entertainment space if Disney reports a weak number. Let's take a look at utilities. Look, between gold and utilities, pretty clear that things are moving to areas of perceived safety. We're going to go over the S&P 500 in a minute, but let's take a look at these utilities. Right? Actually broke out over this key area of 45.50 or so. Looks like we're coming back up into an area of resistance. You can see that here. Okay, it may consolidate a bit here. Look at the volume. Look at the accumulation. It has had a pretty intense run. So it does look as though maybe we could see some consolidation, a little bit of a pullback before it tries to move higher. But there is definitely a change in wanting to get involved in stocks that have some perceived safety. Walmart, another one that is actually in an area. It looks as though it's flirting with the $67 holler. It's come up into this trend line. You know, this is actually resistance. If it can break through that with some conviction. Look, this is not a short-term scalp trade. This is probably more of a, someplace you want to park some cash, collect a dividend, and have a margin of safety. Let's see what else we got going on. Energy. Energy was extremely weak last week. We had ConocoPhillips come out and report a massive loss, billions, and reduce their dividend by a significant amount. So ConocoPhillips got crushed. Energy in general not looking healthy. I think some of the comments from the ConocoPhillips CEO was that oil looks to stay depressed for the next year or two. So you need to be extremely careful in the oil and energy sector. Lynn Energy came out, and they had an announcement. Basically, it looks like they could potentially be going away, right? So you need to continue to be careful in the energy sector. IWM was another area of concern. I mean, this basically looks like a bear flag. If we take out 98, let's go back to, if we take out this 98, it looks like we're coming down and going to test 95. We know that we have broken the long-term uptrend, right? Here it is. We broke that. And once you break that, it's very difficult to get back above. So is it possible that the IWM could come down here and test this 85 area? It is absolutely possible. Let's go look at the S&P 500. I know this sounds doom and gloom, folks, but this is just the way it is, right? Actually, I was doing a little messing around with the Fibonacci's on this S&P 500. Clear all this stuff out real quick. Let's take a look at it. You know, S&P 500 has not broken the long-term uptrend as of yet. It did break the ramp. but it hasn't broken this longer term trend line that we have in place. It did break this one here, right? Broken below that, and then that served as resistance. Couldn't get back above it, and now it's coming back down. It looks like we're going to test this long-term trend line here. Look, if we break this long-term trend line, folks, it's going to get scary in the markets. Okay, and then you start looking for areas of potential support in the S&P 500. Right? If we break below here, where do we go next? You know, I try to look for areas where you have several key points of resistance or support. So 1700 basically, right, in this area, maybe 1725, something like that. And then let's look at, I mean, where do we really get some significant support? I mean, this is pretty scary, right? Down into the 1430 area. Is it possible that we could go there? Anything's possible. So, you know, if that happens, UVXY, and which is one that we have been pretty focused on since the beginning of the year. UVXY, TVIX. These are areas that you're going to be able to find some opportunities to trade. Okay, it's TVIX flirting with the $10 holla. USLV, we already talked about that. Interesting action in the dollar. You know, that was a trade that everyone was thinking the dollar was going to rip. And what wound up happening is the dollar actually had a pretty good little fade last week. I'm sure this caught some people off guard, but continue to watch the dollar strength. We talked about oil already, looking weak. Retail, right? Terrible numbers out of coals. We've been getting some poor economic numbers, honestly, which is very interesting. And then you have, you know, everyone saying, well, geez, we might have the Fed back on deck for raising rates because of the employment payroll number on Friday. We'll see how this all plays out. Let's see what else. Consumer discretionary closed nearly at the low of the day on Friday. Home builders looking weak. Financials looking weak. Industrials. Actually, industrials had a little bit of a bounce last week. I think we get GE reports next week. That could be interesting for the industrials. You know, Honeywell reported they actually had pretty decent numbers. Technology, obviously, under a lot of pressure. So listen, folks, could we have a really nice short-term rally, short-term bounce? I think we could. I think the guidance that we're getting out of a lot of companies has been fairly negative. I think it could be tough on the markets. We've got some geopolitical concerns with Korea launching their satellite into orbit. That's got people on edge. You know, we've got tensions between Saudi Arabia and Iran. We've got a lot of different things going on. I think Barron's put out an article this weekend of oil going to $20 a barrel. So a lot of turmoil out there. Need to be cautious. This is a short-term trader's market. Great for scalp trading. Look for volatility. Watch silver and gold. I think you're going to have plenty of opportunities to trade some things in that realm. We do have earnings. Pay attention to Disney on Tuesday. And that's it, folks. That's all I've got going for this week. Actually, did I talk about, you know, I'm not sure if I did this or not. I guess that's my short-term memory. AG is one stock that I am watching. It's a silver stock, silver miner. You know, I am looking at that USLV. So I'm looking at this AG for a potential trade, right? Potentially go up and test the $4 holla is what I'm looking at. Okay. If silver makes a move, I think this AG, it just broke this long-term trend line. I'm thinking maybe it could go up, test $4 holla if silver makes a decent move. Another stock that I am watching is NG. And the reason why I like this NG, I'm going to back it out to the weekly. It's got a potential flat top breakout going on, right? Long term. Listen, it's had a nice move already into this area, so it might need to consolidate a little bit before it breaks. If it breaks, I think you could get a pretty tremendous run out of this. Take out the $5 holla. Like I said, it may need a bit of time to consolidate, but it is one that is on my radar for next week. And see if there's anything else that was really standing out at me. I guess that's it, folks. So, look, a lot of caution out there. Be careful. Let's see how Disney earnings play out. Let's see if we get any kind of an oversold bounce after the sell-off and close at the low of the day on Friday. The one good thing is we do have the China markets closed for the entire week, so they can't really add to the volatility in the market. So maybe we get a little bounce. You know, be open to it. But like I said, this is not a time that you want to start building long-term swings or long-term positions, right? Just look at what happened to Google, which had a tremendous earnings report last week. Let's go to the daily. Tremendous earnings report last week. I think it got up into the 820 area after market, after close. It's down to the it closed at 680. That is a huge drop for a stock that reported tremendous numbers in earnings. So just be extremely careful out there. And that's it, folks. Enjoy the rest of your Sunday. Enjoy the Super Bowl. My pick is, well, let's just go with this. I would love to see Peyton Manning win and ride off into the sunset on the top, have this be his last game that he played. However, I think the Carolina Panthers are just too damn good on both sides of the ball, offense and defense. I know Denver's got a tremendous defense, but we'll see how it all plays out. Ideally, I'd like to see Peyton win. I just don't think it's going to happen. But anyway, enjoy the rest of your Sunday, and if you want, come on by to the chat room. Got a tab on the blog there, Trader's Den. There's some testimonials there. If you want to come hang out, you're more than welcome. Click on that tab, and the link is right there for Trader's Den. Come join us in the chat room this week. Be careful out there. Trade smart, and I'll see you all next week.